Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. And I pulled up the long-term view just so you can get a look at where we are in the scheme of things here. We seem to be setting up another one of these tops that we're going to rally back into once we find a bottom. Now this one obviously is much larger as far as the scale, which is going to proceed, if we continue up, is going to precede a much larger price move. You can see that the size of this move here from top to bottom is about, we got 21 to down about 850. So we've got about a $12 move or something like that. Now you can see that we ran all the way up to nearly 50 after we got out of that. So that's going to be a fourfold move at least of the size of that. So if we get a fourfold move of this that we have right here, 25, 50 down to roughly 26. So we're talking about 24. If we get a fourfold move out of that, you're talking $100 increase or so. So you're looking at a price above $100 if this pattern holds. There's no way to know if this is going to hold. You can see down here on the MACD, we are slowly starting to round up, and you can see that when we finally did cross here, the corresponding price rise was from about 26 to 37. So we should expect something similar or stronger when we cross here, and that doesn't even account for the fact that at some point when we cross the zero line, we may get an even stronger rally. So it's quite possible that we could get a fourfold move on this once it really starts to move. I think that time is going to be probably now and between the end of the year, but I'm not making any predictions on that. Now let's get over to the question of the night, and that is from George Silver. He says, "Dear Brother John, central banks, large banks, and big players are buying massive amounts of gold but not silver. Central banks have the ability to know what is going on in the markets before the rest of us have any inkling. Central banks may be corrupt, but they're not stupid. If they wanted to buy silver, I'm sure they could. We are constantly told supply of silver is scarce, but is it? I read an article recently that said the Perth Mint was experiencing no problems obtaining silver. Bullion Vault, my main silver holder, is not experiencing any problems. Industrial users don't seem to be having a problem either. Could it be that silver is only being bought by the average person and the industrial user? Could it be the future is set for gold but not silver purely because of its industrial use? Could it be that we'll see silver to gold ratio of 150 to 1? Very good question. Now I disagree with this statement. If they wanted to buy silver, I'm sure they could. Actually, no, they can't, because there isn't enough. Now, if you look, central banks, we don't know what central banks hold, but let's just look, let's just talk about the Chinese central banks, $2 trillion, say, their $2 trillion holding. So let's say if the Chinese central bank decided, hey, let's put half into gold and half into silver, something like that. So $1 trillion into silver. How much silver would $1 trillion buy right now? We'll say that silver's $30 an ounce. So trillion divided by 30. That's going to be 100 billion, and then divided by 3. So I think that's 33 billion. Let's get the dreaded calculator out and figure that out. So if we had 33 billion times 30, and yeah, that's a million billion. There's your trillion. So the question is where are you going to get 33 billion ounces of silver? You're not going to. How much higher would the price have to rise for there to be something available? I don't know. 33 times? You'd have to have $1,000 silver price for some to be available for these size of investors. So I've pointed this out many times before in my office series as well. It is impossible for any of the large players to buy silver because the price is too low and there isn't enough of it there. And that's exactly why they aren't, because they know that the price would explode. And so that's actually a great gift to you and to me, because we can buy silver cheap and no one else can. None of the pension funds can buy it. We're going to talk about that later when we deal with the CAFR. But no one can buy it but you and me, because there's just not enough of it and the price is too low. Now, when the price is high enough, and I've argued this before as well, when they actually are able to buy it, then we may see an explosion in price that goes higher than that 1,000. So, for example, if we get the $500 or $1,000 price in silver, we may actually see a price explosion from there, because at that point, these groups, the central banks, the large banks, and the big players, will actually be able to buy just because the price is high enough. So, very bullish in my opinion. This is sort of a FOFOA sort of argument. You want to do what the central banks are doing, and the central banks are buying gold and they're not buying silver. So silver is more of a speculative asset as opposed to gold. I don't agree with those arguments at all, and I think the people that make those arguments are arguing the central banker's book. I think that there's a high likelihood in this coming calamity that central bankers are going to be thoroughly discredited, and it may be that they are doing the exact wrong thing at the wrong time. So I'll have to wait and see on that. Now, with the price so low, I always do some shopping, and I wanted to give you the benefit of my shopping. I don't have any dry powder right now, so I'm not able to take advantage of these, but I thought I'd show them to you if you were interested. This is one that I found that's on Provident Metals. This is a 1995 Australian Kookaburra. You can see you can get it for $32.45. That's roughly, I don't know, where are we at right now? $27.27. So that's $5. It's a $5 premium over spot for this 1995 Kookaburra. I'll give you a better look at it here. So, pretty nice coin. I would guess that you could probably turn around and sell this right now for 30 or 40% more. So I expect after this video, I don't believe that I have a big impact, but I do expect that the 88 that are left at Provident after this video, they're not going to be left, because this seems to be a mispricing to me. If you check on eBay, you can see that they're in the 40s and 50s. So I don't have any dry powder, but anybody who does may be interested in picking these up. Now let's go over to the main story of the night. This is one that has been in the news, well, in the alternative news a little bit, and that's because of the 3 recent municipal bankruptcies that we've had in California. And of course, this is going to be the topic of the CAFR. I've addressed this before. Sorry about that. I've addressed this before, and this is a pretty complex issue, but I want to address it again, especially in light of these recent bankruptcies. Now, the CAFR stands for Consolidated Annual Financial Report, and the best way I've heard this explained is that the CAFR assets, the assets that these governments hold, they're the equivalent of the government's savings account, while the tax revenues that they take in and the general expenses that they pay for the day-to-day operations of the municipalities, that would be their checking account. So whenever we're talking about these municipalities getting in trouble, we're talking about them getting in trouble with their checking account. And the big question that everybody is asking, of course, is why aren't they dipping into their savings account? Now, this is actually a Rents article back from the 30th of June in 2000, so this is 10 years ago. Back then, there were $60 trillion in CAFR assets. Now, if we go over to the California one, you can see that that's been in the news recently. The California CAFR is $577 billion. I think Walter Burian is how you pronounce his name. He's the CAFR guy. If you look him up, he's the guy who broke this story many years ago. But I think he pointed out that if you take all of the governments in the state of California, city, state, county, and all the little municipalities that are added to that, you get $8 trillion in assets. And so that's a lot of money. Again, I said it was $60 trillion. So let's read a little bit of the Rents article so you can get a little explanation. Then I'm going to comment. Reported but for all purposes hidden from American taxpayers, local, state, and federal governments currently hold about $60+ trillion of profitable investments in real estate, pension funds, insurance companies, liquid investment funds, bond financing accounts, and corporate stock portfolios. $32 trillion. Over 53% of America's stock market and a large percentage of the international stock market, etc., are all revealed in the required filing of CAFRs and known reports therein. So now that's really important when you think about that. 53% of the stock market. So that's 53% of the publicly held companies. So that's more than half of the companies in America. More than half of them are owned by the government. Now that number may be larger. So are we already at the point of fascism? Are we already at the point of communism? We may be very close. Walter Burian, who has been blowing the whistle on this gargantuan scam, says, quote, Americans own the majority of America's wealth and don't know it. With the profits rolling in from international investments, you know the true motive behind NAFTA and GATT. Calling it risky to allow taxpayers to invest a tiny 2% of their Social Security in the stock market is laughable when our government already have $32 trillion invested in the same risky domestic and international stock markets. And it goes on, and I'll link the article so you can read it. So, of course, the big question that comes out is how are these municipalities filing bankruptcy when you have these CAFRs floating around? And the numbers in California, Jerry Brown said they have about a $16 billion budget shortfall, but they have this $577 billion CAFR. Now, so the key, one of the keys to this is going to be the law that they use for their bankruptcy filing. So I wanted to look at that real briefly. This is a article that I found called Overview of Chapter 9 of the Bankruptcy Code, Municipal Debt Adjustments. And when you start to, and Chapter 9 is the section of the U.S. Code. It's Section 11 of the U.S. Code that allows you, the Bankruptcy Code, that allows municipalities to file bankruptcy. States technically cannot file bankruptcy. We're going to see that this is related to the constitutional issues in regards to this. But let's look here at the 10th Amendment issue. 10th Amendment limitations on bankruptcy court power. The 10th Amendment of the United States Constitution guarantees that certain powers will be reserved to the states with respect to the management of their affairs. Chapter 9 of the Bankruptcy Code recognizes this reservation of power and limits the bankruptcy bankruptcy court's power to regulate the day-to-day activities and operations of a municipal debtor. For example, Section 904 of the Bankruptcy Code states that absent the consent of the municipality, the bankruptcy court may not interfere with A, any political or governmental power of the municipality, B, any property or revenue of the municipality, or C, any income producing property of the municipality. Now this is going to key in on our CAFR here. You can see the municipality has revenues and also has income producing property. As a result of these restrictions, the bankruptcy court is not able to take certain actions in a Chapter 9 case that it can take in other bankruptcy cases. For example, a bankruptcy court cannot appoint a trustee to operate the municipality or allow a secured creditor to force the sale of assets to satisfy the creditor's lien. In this regard, municipalities in bankruptcy enjoy a level of protection over their operations and property that other debtors do not have. Okay, so you can see that this is not an ordinary bankruptcy at all. No bankruptcy court approval needed to use or sell assets. Consistent with the limited role of the bankruptcy court resulting from the reservation of states' power in the 10th Amendment, a municipality does not need the approval of the bankruptcy court to use, sell, or lease property during its Chapter 9 case. By contrast, non-municipal debtors need court approval to take any action outside of the ordinary course of business, such as selling assets or buying significant items. Accordingly, if a municipality determines that it would like to buy or sell a piece of real estate or make a significant capital improvement to its roads or infrastructure, it may do so without needing to ask the bankruptcy court for authority or without following any other special procedures as applicable to other debtors. So you can see here that the Chapter 9 code that's applied to the municipalities really isn't true bankruptcy at all. All the power is still left with the municipality. So there is no power to force these municipalities to sell their assets. It doesn't exist. Now, so that's a partial answer, but I think the real answer is going to lie with the size of this whole bubble, I'll call it. Now, if you go into the California CAFR, there's links on that one, and you can go into any of these CAFRs if you want to. But you can find out what the cash, liquid assets, bonds, stocks, etc. that are listed as in each of these individual CAFRs. And the question that people ask is, what's going to happen when they run out of money through the general revenues and they go into Chapter 9? Why don't they just sell off some of these assets? Well, they can't be forced to do that, first of all. I've shown you through Chapter 9. But second of all, you have to remember that those assets, most of those assets, are the debt obligations of other governments. Okay, so many of those assets, the bonds, and then of course we've got stocks, but let's just look at the bonds. They've got federal treasuries, they've got other municipal debt, they've got other bonds that they've invested in from other municipalities and states. And what's going to happen if these municipalities begin to liquidate these portfolios to start to deal with their budget shortfalls, then what you're going to see is a cascading selling event. You're going to see, as other municipalities, as their assets begin to decrease because of the selling, they're going to begin to sell. And so you're going to be looking at a cascading crash of not only bonds but stocks and the entire bubble paper financial system. So I think that's the main reason why Meredith Whitney has been held off, let's say, since she made her prediction of rolling municipal bankruptcies. I still think she's going to be proven to be correct, but as I've shown here with Chapter 9, even if they go through those municipal bankruptcies, they're not going to be forced to sell off these assets. So they're all holding on to their assets. It's a lot like the video that the two comedians did on the European situation, where Greece owes money to Spain, Spain owes money to Germany, Germany owes money to Greece, and they all owe each other millions and billions and even trillions of dollars, and all of them are broke and they can't pay each other, but nobody's willing to call in the mark because it would collapse the entire system. So that's what we have with the CAFRs as well. The governments already own more than 50% of all the publicly owned companies. So we've already moved into a form of fascism, and they're now in a position where there's no one to sell to because they own the vast majority of everything, and they can't sell to themselves, so they're in a position where they can't sell to anyone. So that's the CAFR, and in my opinion, it's actually a lot like the question about silver. The reason why there are no big buyers for silver is there can't be, because the door isn't big enough, and you'd have an explosion to the upside in silver that would take it moving many, many multiples higher in price. The same thing is true with the CAFR. You can't have anyone selling these assets because it's going to cause a cascading collapse of the paper assets. So we're looking at a potential explosive rally in the hard assets and a potential catastrophic collapse in the paper assets. And of course, that's why we're stacking physical silver. And we'll talk to you next time.